Okay, good evening, everybody. A little bit early, actually. It's 1 minute to 8, so hope everyone's doing well. Hope you're all having a good week. I'm going to start with an apology. Just I've got a terrible cough at the moment, so there is a very good chance I'm going to cough and splutter my way through this one, but hopefully I'll hold it together at least for the next couple of hours. Let us know if you can hear me. That's always the first check I want to do. Once to do, we'll go through everything else. Just looking over in the chat box, seeing if someone can just acknowledge that. Perfect. Thank you, Chris. Hi there, Reese. Hi there, Tim. Hope you're all doing well. Okay, so yeah, thanks again for joining us. I didn't think we were going to have much to cover tonight, if I'm perfectly honest, but we actually do, which is great. You know, that's what we want, I suppose. So I'm going to try and get through things in a, relatively smooth but efficient manner. So we're going to have a look at news as we do. There wasn't too much news until probably yesterday. We're going to have a look at some regulatory things. Gary Gensler is going to feature a lot in the news today. We're going to have a look at Coinbase and some things that they've said that might be a bit alarming going forward. We're also going to have a look at some RT questions. So thank you for those that submitted the questions in advance. We'll pick up and we'll run through those. We do have a research token today, which is reserved rights, or RSR. It's a little bit more complicated than just one token, but we'll go into that when we do. And then we're also going to address what was effectively the title of the thumbnail. Are we approaching an alt season? And if so, what does that mean? And we're going to have a look at that, what that could possibly mean for the price of Bitcoin, what it could mean for some of your favorite alts, and certainly have a look at maybe what I'm going to consider doing over that period. Then we'll drop back into BTC. We'll have a look at the price action there. Before I look at some other altcoins and just see what it is. As always, if you've got any questions, feel free to drop them in the chat. I will periodically go through and hopefully I won't miss too many. But without further ado, let us crack on. Okay, as always, I'll tell you what, let's just move that out of the way so I can actually see the questions. Okay, so as always, just a bit of an overview of where we are. Bitcoin's still steadily moving up. It's had a bit of movement today, up and down. It was 15, 20 minutes ago below 30,000, but we're still hovering in around that 30K level. And you can still kind of see that the uptrend is on. The one thing that I am looking at the moment, and we will go into this a little bit later on when we talk about alt season, but it is, if this will blow up, this is the Dixie. I've had this box drawn for some time and we have effectively bounced off the 100 level. And what I'm thinking at the moment is, are we forming a potential double bottom here? Still a long way to go. This is the daily chart. It's going to take a fair few candles for us to confirm that. But where we did bounce seemed like a logical area. Whether or not that bounce is sustainable, we'll only wait and see. But that is one thing that I'm certainly keeping an eye on. Ethereum, after the Shanghai update, has continued to do very well. Yeah, it's not fared so well today and yesterday, certainly today compared to BTC, but generally since the upgrade, and it has gone very well. There have been more withdrawals than there have been deposits. I think that's probably to be expected. A lot of people will look into, but it hasn't dumped the price. And so, yeah, we can see where that goes. And then at the moment, all I'm noticing with the US 500, and it's not very well drawn because it's on the daily, but there is some form of compression there. Is that going to tie in with an uptick in the Dixie? Because this may fall. Right, let's move on to some of the questions. Okay, actually, I'll tell you what. These are some of the questions. I'm going to actually cover them later. I realized I was covering them later. So we'll dive straight into the news. First one about Gary Gensler. This is just probably a bit more amusing than anything else. But a US congressman has tried to introduce some legislation to have the chair of the SEC, Gary Gensler, removed from his role. Now, there's a few things that are cited from this, but effectively, excuse me, the concerns have been that in his 2-year tenure, he has introduced some, well, it's a record number, I don't know the exact number, a record number of laws in the 2 years. And matter of fact, most of his predecessors in a similar time frame had done less than half of that. So there's a concern that he is rushing through laws and regulations. They're not as well thought out as they should be, and they could cause some further problems. this probably won't lead to much, but I just thought it was an interesting story that someone's decided to take their bat and ball home. They've had enough, and they're going to try and oust him from his role. Mr. Tacker's put 55. I think the 55 is the... You possibly could be right. It could be the exact same number, but I was under the impression that was the regulatory Wells notices, whatever you want to call them, against crypto-related projects. But anyway, there has been a hell of a lot. Excuse me, I am going to cough again. I've held it back. Okay, bit more on Gary, I'm afraid. He has had a tough time of it. This one came out yesterday. So yesterday was actually his 2-year anniversary in the job. So he started in April the 17th, 2021. And just by sheer coincidence, he today is getting grilled by the House Financial Services Committee on what a stellar job he's been doing so far. I've got a few clips and everything else of this going forward because it has been a particularly interesting session. I don't normally watch these, but I've watched a couple. And just some of the sound bites that are coming through it have definitely been worth it. But it's fair to say that the chair of the Financial Services Committee, Patrick McHenry, has not given him a very good time. There's been a couple of very pro crypto congressmen or senators, excuse me, I don't know who they are, but representatives in this committee that have also decided to grill him on his position and how much of a, well, I was going to say a stellar job, but you all know I'm joking with that one, how much of a particularly crap job he's been doing for helping the crypto innovation within the United States. I think, so, God, I hope the sound works on this one. I'm going to post both of these in afterwards. This is the 4-minute, so the first one here is the 4-minute introduction from Patrick McHenry, who I said is the chair, and he does give Gary Gensler a very tough time, and the responses that Gary gives are not particularly, one, informative, like a true politician, I suppose, and two, don't provide you with any particular confidence of where we're going in the future. Honestly, I know it's probably not everyone's cup of tea, but if you're giving me enough time on a Tuesday evening to have a look at this, just spend 4 minutes watching that. It's well worth it. But this is, the one below is a sort of a soundbite. It's about 22 seconds long. I hope it plays. I hope you hear the sound. And yeah, we'll just see what is said.
I'm asking you, you're sitting in your chair now to make an assessment under the laws as exist. Is Ether a commodity or a security?
Without speaking to anyone.
I know you've repeatedly said you're not going to speak to one, except you've spoken to one.
Bitcoin. As amended.
And as you can see there, he is, I mean, that was the opening salvo. Already hesitating, already shaking, already struggling to come up with an answer for that. He was asked a very simple question. Is ETH a commodity or a security? We discovered this discussed this a couple of weeks ago, because obviously the SEC, the Securities Exchange Commission, are going after Ethereum, claiming it's a security. But we also had the CFTC a couple of weeks ago come out and say that Ethereum was a commodity. And the whole point was, how are you helping the American investor when you two massive agencies yourself can't define what Ethereum and Ether in particular actually is? And it's more of a case of you are bringing in enforcement and regulations through just hitting people by suing them, not hitting them physically, rather than giving them advance warning as to perhaps what they have done wrong. And this goes on that yesterday, Bittrex platform received is being sued by the SEC for operating an unregistered exchange, broker and clearing agency. Now, again, we discussed this, I think, 2 weeks ago, but Bittrex has decided that they are going to leave the United States. And they're not the biggest exchange out there anymore, but they are certainly one of the oldest ones. But the fact that they are leaving the United States just sort of says a lot of potentially where feeling and sentiment is in terms of the way regulation is particularly going, and certainly the uncertainty, around that. Now, it's actually quite interesting in terms of what tokens were classed as securities within that notification that was issued by the SEC yesterday. So I've just seen that someone's having a problem. Hopefully nobody else is having a problem, Reese. I think everybody else is in. But anyway, so as I said, Bittrex was charged by the SEC for being an unregistered operations, and it cited 6 tokens as securities. And what's interesting is the tokens that were at. So it's OMG, some of you may have heard of that one, Dash, something that we covered a couple of weeks ago, and Algorand. Now, the other one's Monolith, Naga, and IHT. I'll be honest, I've never heard of those. But Algorand was particularly interesting because of a video that resurfaced yesterday of Gary Gensler speaking at an MIT conference prior to him being the chair of the SEC. So this is going back to the 25th of April 2019, in which, I'll be honest, he's talking about fintech, but he is, I personally think it's about 45 minutes long. I've watched probably about 30 minutes of it skipping through, and he isn't a major bear, or he isn't bringing down cryptocurrencies particularly. I think he speaks to them of what they could become. He certainly doesn't seem to have an axe to grind necessarily with cryptocurrencies. But what is interesting is he singles out Algorand as a potentially very good project coming up in the future. The irony now being that 4 years later, and he is now determined that that's a security and is not something that you should be touching. Like I say, the video, which I'll show you another soundbite to, goes back 4 years when he wasn't involved in the SEC. So again, let's see if this video will play. Hopefully it does. It's at the beginning.
Governance is tough. You could create Uber or Lyft on top of the blockchain technology today. Well, maybe in 5 years you could. It would be heavy performance. Sylvia McCally's Algorand, who's a Turing Award winner at MIT that I work with. Sylvia's got a great technology that has performance. You could create Uber on top of it. The question is then who...
So there you go. A great platform that you could build Uber off, is the exact words that he went on to use. Now, again, I'll post that soundbite. I'll also post the actual video. This is the video where he talks about it. I don't suggest anyone's going to bother spending 50 minutes to have a look through that, but you just can scan through and you can get a feel when he is talking about cryptocurrencies and Bitcoin and the potential disruption it can have to the financial market. He is not confident that it's going to, displace current assets, etc. Of course not. The market's a completely different side, but he doesn't write it off as being a total sham and something that needs to, being squashed and removed from the borders of the United States. So it's interesting to say that in the 2 years that he has taken over, the change in the stance that he has gone on to had. I think I kind of covered most of this stuff, but for those of you that weren't aware, he is the chair of the SEC, and he took the office on April 17th, 2021. And that was just to show that the video came out prior to that. What have I opened up? Here is the question. I'm not necessarily too sure what this one was for. Oh, well, okay, I do remember now. This actually hasn't come out this week, so I'm not sure why it's in this week's news or in this news segment. But effectively, at the beginning of April, there was a paper that was released by the US Department of Treasury, which was basically, it's published and titled DeFi Illicit Finance Risk Assessment. It's a real contradictory kind of paper because obviously it's particularly scathing towards the DeFi space within crypto and the potential illicit wrongdoings that could be undertaken there. But it actually does say in the conclusion, I don't think I've got the file open. I must have closed it. Maybe it'll open up quickly if I click on this. Oh, it does. So if I just scroll down to the very bottom, there's a level of research that goes in for you. What it goes on to say, quite interesting, is moreover, down here, moreover, money laundering, proliferation financing, and terrorist financing most commonly occur using fiat currency or other traditional assets as opposed to virtual assets. So there we go. For years and years and years, we were always told that ever since Silk Road, every single illicit activity was always done on the dark web using cryptocurrency. Actually, now we know that it barely touches the surface. It goes into detail within the report to suggest that it is such a small amount that they really need to focus more on traditional mechanisms. But why am I bringing this up and what is the problem? Well, what they're effectively saying within this report is that because of the lack of AML, because of the lack of KYC within the DeFi space, decentralized finance, that presents a risk So they are effectively trying to categorize many multitude of different sectors within DeFi, whether that be DEXs, whether that be bridges, whether that be lending platforms or what have you, and try and, well, I would use a term, find a common link to call them centralized, and then if they're centralized, be able to use AML and KYC checks and really take away that decentralized aspect within that. And again, it's just another department within the United States stifling innovation, stifling growth, and really making it difficult for not just the average retailer, but the entire population who are interested in cryptocurrency to really take advantage of that. So got to see where, excuse me, where this one moves on out. But again, not a particularly good report that's come out there. Again, not that any of you will read it cover to cover, but I'll post it all within Discord. And then something that was mentioned today by Brian Armstrong, it's a gentleman here. For those of you who aren't aware, he is the CEO of Coinbase, obviously one of the largest exchanges in the world, and certainly probably the largest exchange based in the United States. He was speaking in London today, and he's effectively said that the SEC are making it so difficult for centralized exchanges at the moment that he isn't actually ruling out that they might not move Coinbase Global Incorporate, so they're sort of a main parent company, I suppose, moving its headquarters outside of the United States. Now, again, it's just an off comment, it's just a throwaway comment, you might say, at this particular time. But the fact, excuse me, the fact of the matter is that we already seen Bittrex driven out. We know that Binance have had to set up their own separate exchange just to be able to operate there, and who knows how long that will stay. But you know, if Coinbase were to leave the United States, and I think that'd be a massive statement of just where or how far behind the United States are going to find themselves, and you know, really kind of leave the door wide open for someone else to potentially take ownership, or not ownership, that's not the right word, but maybe become the driving force behind crypto. I think at the moment, we always think of the West, we always think of the United States markets and stuff that's happening in the United States driving the crypto market. Well, maybe this could be an opportunity for the East. So, you know, some pretty, not necessarily a threat, but some stern words that have come out there. And yeah, we'll just have to wait and see what goes from that. But it was interesting that he was over here talking about that. I don't think he suggested that they might move to the United Kingdom, but we know that the UK is trying to be a lot more open towards cryptocurrency. So hey, maybe that is, excuse me, that's where they end up going. And then this one just made me laugh a little bit here, because the Bank of England officials say stablecoins may need limits. And effectively, this is Deputy Governor John Cunliffe. He sort of said, yeah, we like stablecoins, but we're a bit concerned that if they are introduced too quickly with no limits, to suddenly they're going to disrupt the current financial system so much that it just completely destabilize that and yeah, knock it on its ass. And I just find it amusing that he's probably talking about CBDCs, but when we think about stablecoins, we think about sort of the whole cryptocurrency side of things. You think about the stance of the average cryptocurrency hardcore investor, very much about giving it to the sticking it to the government and all that, and they're trying to run off the back of these technologies, but also trying to save their existing system at the moment. So I'm not going to bother going through the whole of the article, but you know, the fact that they're saying that stablecoins need limits and you would only be able to spend a certain amount of those before you have to revert back to cash and credit and the current system is yeah, particularly ridiculous. Right, okay, that's kind of it for the news. I tried to run through that as quick as I could, try and go through some of the questions and see if there is anything there. And I'm going to drink some of my cold tea, so excuse me a second. Doesn't look like it, just potentially might have had Reese having some issues, but hopefully he's back up and running. Good thing about YouTube, Reese, is you can just go back and watch the beginning of that and then fast forward to where we are. You didn't miss too much, I don't think. Okay, right. I think what we'll do is we will then go through the research token, and then we'll go through the questions and everything else. I'll just move everything around. Try and find, oops, open up the wrong one. Here we go. Okay. So This was asked for by Bijan. I'm not sure if Bijan is in the chat today, but he wanted me to go over reserve rights, or RSR. Now, to be honest with you, RSR is just a part of an entire well, I say entire, it makes it sound massive, but part of an ecosystem which belongs to Reserve Protocol. And you can't really go through and explain potentially what the benefits of RSR are without explaining what Reserve Protocol is and some of the other aspects within the ecosystem. So this could be a little confusing, and I apologize in advance if it is. That wasn't necessarily my intention for it, but I think it's just keen to explain some of the elements behind all of that, and then we'll go into sort of tokenomics price and what I think about RSR after that. Okay, so what is Reserve and what is the Reserve Protocol? Well, effectively, I mean, in a completely ideal world, what Reserve is aiming to achieve is to create an asset-backed stablecoin that is immune to inflation. I think that's probably the easiest way of putting it. And when I say asset-backed, what I'm talking about is any asset. So not just using a fiat currency, but also being able to use precious metals, stocks, bonds, retail, fine art, wine, horses, God knows, whatever you could imagine. So long as it could be tokenized and put onto the blockchain, then it could be used as a collateral for an asset-backed stablecoin that you could create. Now, there are some drawbacks to that already, and I don't think they need fully explaining, but we're not really there yet in terms of being able to tokenize a lot of the assets that they would ideally like. Fiat, obviously we can. We have a lot of stable coins already. There is some instances in which gold is done, but I don't think there's any instances of another precious metal, and certainly stocks, bonds, retails, and that. So we're not quite there yet. But as I said, in an ideal world, that's where they're looking to go. And they have an ecosystem, for want of a better term. And within that ecosystem, there are sort of three components. There's something called the R token, which I will explain in a moment. And they have one in particular called RSV. So I don't know what that actually stands for now, reserve something. But anyway, RSV is the token there. Then they have the RSR token, which is effectively the utility token. Serves governance issue problems, also to act as a payment term. And then there's the app, the R app. It's called RPay. And effectively, you don't need all three, but you certainly need the R token and the R app for this to work. And we're obviously interested in RSR, so that's going to be part of it as well. What I should say is most of the tokens I've done on this were, on Avenger calls, they've always been either layer 1s or layer 2s. This isn't a layer 1 protocol. It's not a layer 2 utility or anything like that. This is actually, plain and simple, it's just a dApp that has been built off the Ethereum network. And it is a fully customizable, permissionless smart contract. And so what that means is when we start talking about these R tokens, absolutely anybody can, in theory, create an R token. So you can use the mechanisms within Reserve to create your R token. You can also, because it's permissionless and it's customizable, you can edit things, and that's getting into some significant detail there that one is over my head and two I don't think is necessary for this call. But you could just use the basic framework of what they deem for their R token, RSV, and just make your own token yourself. And so let's just theorize one of those. So we'll call it the RT token, since we are RT. And if we wanted to create our own RT token, what we would need to do, it's not just as simple as just going into the mechanism and creating it. We actually need to provide the assets tokenized, obviously, in the first place. Once we've got our tokenized assets, and we'll stay in what we know at the moment, we're just going to use some form of fiat, whether that be an existing stablecoin or actual fiat itself. We would then decide, because it's customizable, how much of each of those classes of fiat, whether it be euros, dollars, pounds, USDT, USDC, whatever, what percentage of each of those is going to make up our pot. Then we would then put that into the mechanism. That would then evaluate effectively how much we had put in there, and it would spit out the corresponding number of our RT tokens, because the token must be backed 1-to-1 with the assets, the collateral, the collateral we provided, the assets that was backed from it. And once that's done, that's it. It's as simple as that. We can then use our RT token via the RPay app to make payments, to send money to people, to pay for stuff, whatever it needs to be. And we know that that is backed 1-for-1 because our assets are backing that. And, as I said, in the future, whether we can introduce properties or we could introduce art or stocks or bonds, whatever, then that's what we would look to do. Now, because it's backed 1-for-1, it means that we can very quickly withdraw that from the mechanism. So say it served its purpose and we'd have a surplus of our RT tokens left, we can then use the mechanism to take that back out. It'll be distributed into whatever percentages were each of the assets that we provided, and away we go. Or our RT token is a complete success, and because of that, we can just continue using it indefinitely, and it's always backed by whatever the value of the asset is. Now, that's the theoretical side of things. Well, Reserve has actually done that themselves, as I mentioned. And so, originally, I can't find it, there we go. They created the RSV token. Reserve, I don't know what it actually stands for. We'll check when we get to the tokenomics page. But anyway, and this is exactly what they did. So right back at the beginning, they based this on 2 stable coins. It was a 50-50 split between BUSD and USDC, which made the 1-to-1 backing. And up until a couple of weeks ago, there's about $28 million worth of this circulating supply. And as I say, as it was back 1-to-1, there was 28 million of the RSV tokens. Now, we then had the Paxos issue back in February, and they decided they were going to stop minting BUSD. And so a decision was made. There is a governance protocol within all of this. So it was voted that they would remove BUSD immediately. And so actually the RSV for a time was is backed 1-to-1 with solely USDC. And you can go in and you can go through their register in the website. We can have a look at all that. And we can kind of see at the moment that the target back of one RSV is $99.52. It kind of fluctuates like most stable coins do, but it's 100% backed by USDC. Now, I just want you to bear this figure in mind because I just said 28 million, and this is now telling there's actually only 500,000 of RSV. That's not necessarily a problem, but just bear that figure in mind for when we start talking about tokenomics. Sorry, this was supposed to be on night setting. There we go. Hopefully you can see that all a little bit better. Now, this works in exactly the way that I was rambling on about for the R token. But what we want to understand is what does the mechanism do to keep the peg at $1, particularly if we're using USDC. We know that recently USDC had a massive depegging, and RSV was solely backed by USDC 100% when that depeg happened, but it still managed to maintain its peg. So how has it gone along and done that? And there's 3 mechanisms that it effectively uses. And I can't remember if I got the right page. I think it's this one here. So first protocol, if it starts to lose its peg, by a small amount, it's no longer $1, it's now 99 cents, 0.5 or whatever it is currently at the moment. There is a mechanism within there to try and regain the dollar. And this is fairly similar to other tokens, so they're not necessarily reinventing the wheel here. But it goes on to explain down here. It's a nice little diagram to look at whilst I read through it. But if the price of RSV token goes above $1, the vault will sell newly minted RSV tokens into circulation. Alternatively, if there's any excess RSV tokens in the vault already, they will be sold first. RSV tokens are sold in exchange for either RSR tokens or other tokenized assets. So if we had, in this instance with USDC, they would try and sell RSV into USDC to help bring that peg back up. By increasing the supply of RSV tokens in circulation, this reduces the demand and therefore the price. Okay? And basically, if RSV lost its peg and went under $1, it'd do the opposite of that. So conversely, sometimes the price of RSV is below $1 exchanges. In this instance, the Reserve protocol would purchase RSV tokens for tokenized assets within the vault. This increases the demand by reducing the supply, thus RSV token returns to $1. And that battle is constantly happening to try and keep it at $1 at all times. So these are kind of like micro transactions that take place. So that's mechanism number one, to try and maintain the peg. Now, if for whatever reason, like USDC did, it lost its peg more than, 1% or whatever it was, and it started going all the way down. And this is down to like 0.9. So it's a 0.9 to 1 ratio or 1.1 to 1 ratio. So about 10% either way. What would effectively happen is there's a thing called the emergency collateral asset. And this is all part of that complex element within the smart contract that I didn't bother going into. But effectively, there is a sort of an underlying safety net in which they could then utilize the sale of that to bring the peg back within that 10% bracket for then mechanism number one to take over and then try to bring it up. And so, I don't know, you might have it backed by some Bitcoin, or probably because that's pretty volatile, you wouldn't want to do that. Maybe it's another stable coin like USDT or whatever have you. And it would start to try and sell that off. Well, it depends if it went up or down, but it would utilize the same mechanism as before, but it'd just be doing it with another token just to try and speed that one along. Good question, Mr. Tacos. And I'm going to come on to that a little bit later on about is this sounding pretty familiar to UST? And then there's a third mechanism. And the third mechanism is if it drops below that 10%, so it really is falling, what they would then do is they would then sell staked RSR token. And now that is, excuse me, let me just move this out of the way, see if I can find the diagram for it. I don't think I've got it. No, I haven't. I thought I had a diagram for it, but I don't. So you can stake your RSR, and if that had happened, they would then sell the staked RSR back into whatever the emergency collateral asset was. So in my example, it'd be USDT, and then back into USDC. In this example, back when it gets above the 9%, then back to the close to the 1%. It is relatively confusing, and then once you get back to the peg, then there is a mechanism within this that effectively replenishes the funds that were previously taken. So they claim that this is a fairly solid system. I know there was a lot of praise for this pre-Luna, I should add. And so there seemed to be, people seem to think that this was a very clever mechanism to use. Now, just to answer Mr. Taco's question, so we have to go back to USDT and Luna. Now, for those of you who remember, well, RSV is an asset-backed stablecoin. So somewhere, in theory, there is an equivalent number of dollar value of whatever tokens are in supply, because it's backed 1-for-1. UST was an algorithmic stablecoin, and what that used to do was print and sell or burn Luna to ensure that the peg stayed at $1. And obviously how the mechanism failed there was nothing necessarily within the smart contract to stop it from printing itself into oblivion once a mass run went on UST. And ultimately, that's what went and happened. In theory, and certainly all I can find, should I say, in the research that I've tried to do, is that people are claiming that that wouldn't necessarily happen within this system. But I've got to admit, Mr. Tacos, that when I first started looking into this, that was all I could think about, was this just sounds like another UST, I'm out. I tried, fairly complex and fairly simple Google searches to try and see if anyone done any videos on the difference between UST and RSV, but I couldn't find anything necessarily there. So that's something that is added to the list of research before I'd suggest anybody digs in. But, if you had any particular nervousness or unpleasant taste in your mouth after UST, this might not be the project for you. Okay. Can't remember what I'm moving on to now. Yeah, okay. So that then brings us into RSR, which is what Bijan wanted me to talk about and want to have a look at. So what is RSR and why has that got anything to do with RST? Well, you can utilize RSR. it's a utility token for the protocol. And there's two roles within it. You can either stake your RSR so that you have a say in governance. So you can propose changes and vote on any changes that are coming along. But you can also, as it says here, stake your RSR to receive a portion of the R token's collateral revenue. So some of these tokens, particularly because we can't use other assets than crypto assets, may actually be yield bearing assets. And so depending on how many RSR you have, you can take a portion of whatever yield they are earning. And it comes to you in something called staked RSR, which is basically an interchangeable 1-for-1 with RSR. So again, for some people, this may be fairly off-putting, given where we were at the back end of 2021 into 2022, with a lot of these yielding. Now, the yield isn't high. It's actually about 4.5%. It's actually under 4.5%. So we're not talking about 90,000 like the times of Time in Wonderland and all of that kind of stuff. But, again, we are relying on other assets, maturing, providing a yield of some sort, which then is fed into the mechanism and is distributed out to anybody that happens to be staking their tokens. I mean, that's fairly common to a lot of staked tokens. So don't just think that this is doing it. It's very similar. We've got to abort by any means. And there's, again, a nice graphical representation of your RSI, you stake it, you've got your certain baskets that are held up, whether that be stables, whether it be stables and other tokens, whether it be actual fiat, etc. And then depending on how many you have say in voting rights, but also you earn a yield and a return on that. And that's, as I say, that's the primary function, but there is also, for those people that do go on to make an R token and have to do transactions, etc., you can utilize RSR as a form of payment within that. And then we've got the app itself. Now, the app is downloadable on Google Play and also iOS platforms. There's over 500,000 customers. It's available in 18 countries. And as you can see here, out of 5 stars, it's currently working on 4.6 for 6,000 reviews. It's an iOS one. So I thought, right, perfect. I'm going to download it. Now, I knew this before I did download it. But it is not available in English because its primary use function at the moment is in Latin America, in countries where they are under significant inflationary and economic distress. And so it launched in Venezuela, it's in Argentina, it's used in Colombia, Mexico, it's used in some African countries as well. So it is quite widely spread there, but it is not available for the English language. And I don't think it's widely, utilized anywhere outside of Latin America. Now, in Venezuela, Colombia, Argentina, I think there's about, I can't remember if it's 6,000 or 16,000 stores that sort of accept it. But you can also transfer, peer-to-peer transfer funds completely free of charge to any of your contacts. Now, because the only token that you could use at the time on it was RSV, which is back 1-to-1 with USD, that is the primary currency that you use it. But without going through the app, there's videos on it, you can convert that into your local currency if you want. What primarily people do is they take their local currency as soon as it's given it to them, they convert it on the app into RSV, and then that stays at a much more stable rate fighting inflation than their native currency does. And then with this being so widely used, you can use it in shops and you're not having to take a trolley load of notes just to buy a loaf of bread. Trying to scroll down here. Yeah, so you can save, you can exchange, you can talk about all this peer-to-peer at no cost, as I mentioned. You can do crypto on there obviously as well, and then it goes through what the app is. But it's important to know that you kind of need all three of those for this thing to work. Now, the white paper, the company was started in 2018 by Nevin Freeman, Matt Elder, and Henry Fisher. But the project really started coming along in 2019. This is the white paper here. Feel free to have a read at your leisure. As it's dated back from 2018, a lot of these inflation rates aren't right, but you can kind of see what it's targeting. I mean, there's actually a video on the website from Mr. Nevin. Can't think what his full name was now. I just said it, Nevin Freeman. And he kind of just sort of goes into this idealistic kind of view of just solving global inflation. And I get it. It's a promotional video, isn't it? It's actually a very good video. It's 30-minute intro though, so just be careful. But it cuts back to like people like Ray Dalio and a few others talking about inflation and what it is, and it really gives you a very detailed understanding of what the problem is and then how the protocol is supposed to work. So yeah, worth having a look at. I mean, the white paper is what the white paper is. I don't think there's too much to say about that. There's equations in it from the tokenomics side of things, but we're going to touch on tokenomics a little bit later on. I don't know why I've got this RPay up. It's exactly the same, so I'll just close that one down so I don't confuse myself. Okay, so what is interesting is that this has an incredible amount of high-profile VC and investors involved within it, and I think that is a positive. We've got Coinbase that's been invested. DCG, despite all of their issues, are invested. They're a big player. GSR, another big player. Crypto Locus. For those of you that have seen enough of me talking about the AI chats and some of the other newer tokens within these research, these are probably names that are relatively familiar to you. Again, Block Tower, Neo Global Capital, other big players there. And then we've got individuals. So we've got Sam Altman. Now, some of you may not realize who Sam Altman is, but Sam Altman is the co-founder, and I don't know if it's the CEO, but he's certainly the co-founder of OpenAI, ChatGPT. He's been invested in this project right from the start. We've got Peter Thiel, the co-founder of PayPal, personally invested within this. Same with Jack Selby, another person from PayPal, invested within this. And so the list of names and individuals and companies that are involved are very impressive. And I don't think, that should be shied away from. Yes, most of those big companies are invested in an awful lot of them, but this is a payment platform of one form or another, and it seems like people that are very understand the mechanics and there's the what's the word I'm looking for? I don't know. Anyway, the field, I can't think of what the word is. Mine's gone blank. Of sort of payment technologies, they're involved within it, and yeah, I think that can only be a positive thing. And it's not just significant VC firms and investors that are singing its praises. We have large organizations such as the International Monetary Fund, the IMF, have actually dedicated paragraphs and sections to Reserve Protocol and what they are doing for Latin America and how utilizing cryptos within these areas are really saving the general public from extraordinary levels of inflation. So this only came out in February 2023. I'm trying to scroll down to the page. I think it's page 13 where they're mentioned. I mean, it's pretty up to date. It doesn't pull any punches either. It's not a puff piece. This talks about El Salvador, but it also talks about failed attempts. I can't remember which one it is. This one here, Facebook's digital wallet Novi in Guatemala, failed experiments. It goes through all of that. But then it starts talking about Reserve. So Reserve is a startup established in 2019, launched in Venezuela in 2019 and Argentina in 2021. Its users are mostly located in Argentina, Venezuela, and Colombia. Reserve dollar, RSV, there you go, finally worked out what it was, is pegged to the US dollar 1-to-1 and is backed by other stable coins. I mean, we know it's a little bit out of date now, but anyway. Many users seem to opt to convert local currencies receipts into Reserve to protect against inflation. In addition, certain businesses in Venezuela accept Reserve as a payment method for goods and services. Owner beneficiaries of remittances from the 6 million Venezuelan migrants and refugees spread across Latin America, Reserve has proved successful in preserving savings and protecting their livelihoods, granting the benefits of crypto assets without their extreme volatility. And just goes on to talk about that. So again, a very positive piece that has been put out there on something, that ultimately they are starting to achieve what they set out to. So, when we look at, does this have a real world use case? The answer is yes. Yes, it does have a real world use case, which, is what we want to see. Okay. So let's have a look at the tokenomics, because I think that's important when we go through this. So this is Reserve, RSV. As you can see, it's just about at $1. And if we put it on all time, you can kind of see, looks like any other stable coin. Fluctuates, but it's generally flatlined in and around there. Can't tell you the circumstances between that large spike, and I've not even bothered to look in at these spikes, because generally every spike it's had, it's regained its peg. Now, I asked you to pay attention to a number earlier, and that number was 532,000 for the market cap. When I go on coin market cap, it tells me the market cap is actually $28.7 million. And I was like, okay, why the discrepancy? What? Oh, that's not what I wanted. Go back to overview. What's the difference there, and why do I need to be alarmed by that? Because that's an alarming difference to me, and I do want to understand what the difference is there. So first thing I went and did is I went onto CoinGecko. Oh, that's reserve rights. RSV. And now this market cap is at 530,000. So this is aligning more to what we know the actual website for reserve is saying. But for the life of me, initially, I couldn't work out where the other $28.3 million had disappeared. And so I was already willing to just pack up on this, because ultimately RSV is the backbone for this project. Well, that's not true. The app's the backbone for this project to work. RSV is a mechanism for that to work. So the fact that $28.3 million worth just vanished overnight was concerning, because that suggested to me that people had just taken their funds off there, and this wasn't being used as much. And so, I'm straight away thinking the use case for this has died almost overnight. Now, spoiler alert, what's actually gone and happened is that not Reserve themselves, but people aligned to Reserve have created a new digital asset, and they've called it EUSD, so electronic USD, which is again backed. Here you go. So this is it from the website. Put it on dark mode again. So it's about $12 million worth of market cap. You can see it's backed by USD, USDC, USDT, and it's about 25% for each of them. I don't know what the SAs are and the Cs. We'd have to find all of that kind of stuff out. Now, that doesn't necessarily cover the entire shortfall, but the reality is that is where it is. So there's about 12 million of that in circulating supply. And as I understand it, because I can't use the app, because one, I don't have any funds to, and two, I don't understand it when I log on. But there are some that still use RSV, but around about March, there was a big switch over to utilizing EUSD instead. What I would say for Bijan, a little homework for him, I don't think he's on the call tonight because he's traveling. But since he asked to look into this one, perhaps he can try and find out in a bit more detail what actually happened with that changeover, and where the remainder of the funds is, if they are particularly anywhere. But so that was my first initial bit of alarm. But the fact that I've at least recovered half of what was missing in another token, and no one seemed to freak out on social media that I could find in around the early stages of March. This seemed like it was expected, just not very well advertised. Then we go to RSR token, and this is one we're really focusing on because this isn't a stable coin. So the price at the moment is 0.004 of a dollar. That's not 4 cents, it's one decimal place down from that. Has a current market cap of around about $215 or $214 million, and just over $30 million worth in 24-hour trading volume. Now, it has a total supply of 100 billion tokens and a current circulating supply of just over 45.5 billion tokens, leaving 54.4 billion tokens to be distributed. Now, it's where we need to get into some of the tokenomics, and it's not really very well detailed in the paper. But suffice to say, this token has been around for some time, and the vast majority of the vesting and lockup periods were for up to 2 years. That time has lapsed, and so the vast majority of the tokens have been released to market. That being said, the remaining 54 billion tokens are all completely owned, in theory, by the team. There are $5 billion that are owned, $5 billion token worth that are owned by seed investors, by the team, VCs, etc. And then there's around about 50 billion tokens in what is called a slow wallet. And that they are released. How can I explain this? They are released by the team for whatever purpose they feel is necessary. And what is written into the smart contract of that slow wallet is when they make an announcement, you have 4 weeks until those tokens are released. And so those tokens won't be dumped onto the market for 4 weeks. That gives you enough time to research and understand why they're being released, try and get a fair value of whether or not the amount of tokens that have been released over a given time period is reflective of what you think the project is going and what direction it's potentially going within. And if you don't like it, you've got 4 weeks to sell before those tokens come on the market and potentially impact the price. So there is a mechanism within that. I suppose that is a semi-good thing. It does mean you'd have to pay attention to RSR. You'd have to follow it on social media. You'd have to be active within this market, because if you missed a 4-week window and within that 4 weeks they decide to dump all 50 billion remaining tokens, as extreme as that may be, you could be left holding the bag that's worth next to nothing. And so, yeah, that's definitely something to consider. We'll probably chalk that one in the I'm not sure if that's a good thing section. But going back to the rest of the tokenomics, if we just put this on max supply, we can kind of see it's currently around about 195 in terms of market cap. So within the top 200, it had an all-time high of just under 12 cents. So I think that's around about 26x from where we currently are. So that's not too bad. Well, it sounds not too bad, but before you get your hopes up on that, I don't know if I can overlay this at the same time. Don't think I can. Okay, I can't. That's a shame. At the time it reached its all-time high of 12 cents, there was actually only 13 billion tokens in circulating supply. So we've actually, pretty much quadrupled that amount since its all-time high. So, in terms of the effort it's going to take to get back up to there, if we were to move, I need to get a calculator out, well, not a calculator, but if I go to, I got a website here and I can't find it. Where the hell is it? I feel like I'm really struggling to read 5 websites. Here we go, the coins perspective. So if we type in, get rid of that. Get to a night mode, yes it is. RSR, reserve rights. So you can use this to have a look at what it'd be worth. We don't want that. We just want into dollar. And if it was, so if RSR was to get, it's Tether, I didn't mean to do that. I suppose it's good as any. Target price here of 12. So it needs to have a market cap now of 5.5 billion. So just think about that. Back when it only had 13 billion, it only had a market cap of about 1.5 billion. Now to get to 5.5 billion just to get to all-time high. And that's assuming that someone doesn't drop more tokens on there. So it's going to take a lot more effort. And that goes for any token. Don't get me wrong. Any token that has an inflationary supply, that's always going to be the case. But I just want to try and put this one in perspective, because, an initial 25x, it sounds like, well, it's a bit of a no-brainer. I might as well put a punt within it. But it's actually got an awful lot of work to do to get it there. So we just need to bear that in mind if this is something that you are particularly looking to invest in. But if we have a look at RSR on the charts, this is the weekly charts here. And immediately what you can see, and this is no surprise if you ask me, is throughout 2022, 2021 and then 2022, the price has just been continually suppressed and driven down. That's one, going to be affected by the bear market, but two, by the significant increase of unlocking of tokens over that 2-year period. Now, what is interesting is that it actually peaked in the April 2021, and then when you go to November 21, it really didn't get anywhere close to its all-time highs. Now, that is actually pretty similar to a lot of altcoins, so don't just necessarily write it off. But what we can also see is it's still continuing to make, we don't know where this one's going at the moment. it's still in that downtrend of lower highs and lower lows. Now we look at most other altcoins, and since the turn of the year, we've actually made a higher high and a higher low, whereas we haven't actually managed to achieve that yet. So that doesn't necessarily rule it out, but we just got to bear that one in mind, that this isn't performing as well as other altcoins, and that could be because of the token unlocks that we have been having and just the sheer volume of tokens that have been released. What I mean by that is this is about as good as it gets in terms of trying to find some of the tokenomics stuff. But about 6 months ago, beginning of September 2022, mainnet was launched for the Reserve Protocol, and that sort of led to a sharp increase in tokens being released into the market, tying in with vesting periods. And what they're now saying here is that effectively, if you had option 1 and option 2, which is pretty much the vast majority of all of the tokens that I talked about prior, they have now all been released. So there's no further unlocking of tokens except for the slow wallet I've already talked about, and then the 5 billion that are left with the early investors, which I can't find a vesting schedule necessarily for that. So, the remaining 50 billion may never get released. I don't know. I can't forecast that because I don't have any data to tell me of any further unlock. So we are kind of down to how they may react, which again, is going to have an impact on the price one way or another. In terms of, price projections of where we're at, the next real key level on the weekly is going to be 0.05, 0.005, sorry. Let's just get a rectangle there. So kind of taking in this low point here from March 22. There is kind of a double bottom that's necessarily falling there. So there's potential for that to go. After that, we're kind of looking in and around the top of this level. So 0.007, and then 1 cent would be the big push, pulling that into in and around there. If we were to throw a fib at this, let's just have a look. What's going on? Oops, that was not what I meant to do. I suppose the one at the 1 cent is 382. It's probably a good level there. You might want to add a further box then because of this fib, just in and around that noise there, and just see how it does. So again, we're pushing up on a level at the moment, and we've initially bounced off that on the weekly. Still got a fair few days to go on this week, never mind a few weeks after that. Weekly candles are going to take some time to play out. But if we do clear that one, 0.0065, 0.0075 for me, just to clear that noise. There's definitely a fair few levels. And getting it all the way back up to its all-time high, it does feel, like a journey. But if it's one where you're in for the long haul, perhaps it's got some potential there. Let's just have a look, see if there's anything there. Mr. Taco, just thinking also of time. Well, not a stable coin, they had an asset-based system designed to maintain a floor. Yeah, they had the back price, didn't they? A lot of the Ohm forks did that one. Good old Ohm. I wonder where we are with that. Maybe we'll check that one out a little bit later. Rob's put Cypher Hunter is a useful tool for researching cryptos, particularly for checking whether projects have VC backing. Okay, I'll add that one to the list. Thank you for that. Excuse me. So we've done that. We've talked about EUSD. That's its market cap there. Okay, so I've talked about a few of the positives in terms of it does have some real world adoption. It has some some genuine real world use, and it is being used in Latin America, looking to potentially roll it out. So what are some of the negatives? Well, we've kind of already addressed a similarity, but not an identical copy to USDT. However, I must admit, from how it's been explained to me in terms of the mechanism of minting its own tokens initially, then burning through its emergency collateral, and then selling other people's stake tokens, it still feels like that could find where it is exhausted, and then it still may not catch it and just keep on falling through. So there is some nervousness for me with that. I think that's just for the fact that any of these coins and tokens that are backed by further other stable coins are always going to be at risk for that. Perhaps if we have the technology to within the space to move on to tokenizing other assets that are perhaps not as volatile, then yeah, maybe that might provide some further assurances, art or property or stocks or whatever. Then yeah, we could. I mean, can you imagine, having like a really secure fund, tokenized, and then that utilized to back one of your assets? Could be a very useful thing. But we're not there yet, and that's the point I'm trying to make in terms of it has utility aspirations, but those aspirations aren't living in where we currently are. So that's holding me back. There's something else that's hugely holding me back, and this came out only a couple of days ago. So this is a draft bill, which is it says here, to provide requirements for payment stablecoin issuers, research on digital dollar and other purposes. And yes, I've just got to stress that this is just a draft bill. It's only just been released. I'm sure it's going to get amended, and it may not even make it all the way through. But the long and short of this bill, for the TLDRs, too long didn't read. That's the acronym if you went away with that. I mean, it's still fairly long, this bit here. But ultimately, decentralized stables would become illegal in the United States. So things like DAI, LUSD, RAI, and then in my view, things like EUSD and RSV would also fall under that category, particularly in their current states where they are only backed by fiat-based and particularly within that stable coins themselves. So they would become illegal within this. And what would the knock-on effect of that be? Yes, it might be utilized for real-world adoption within Latin America, but what are the ramifications for what that would mean in terms of interest from Western investors in things like the RSR token? And if that suddenly dried up, people started unstaking that and selling it because there's no interest within that. Suddenly you lose that ability for that third prong attack if you do lose your pegging. And is the integrity of the token then being called into question? Honestly, I don't necessarily know. It's got a lot of work to go within this bill, and there's other things within here, but the full summary, as it says here, the act makes it illegal to offer unlicensed stablecoins in the US with a maximum fine of $1 million and 5 years in prison. So just for offering a decentralized stablecoin, and you could be fined $1 million and 5 years in prison. Who is going to bother sticking their neck on the line and creating their own R token if that's the ramifications that you could face? So yeah, I see that as a major hurdle which might be thrown in front of it, and that's one that I don't particularly want to face if it comes out. Now it is an if, and I don't know how long these bills take to get through. If it's anything like the UK system where it's got to go through Parliament and Lords and then Parliament and then Lords, and it goes through that about 15 times, then yeah, we could be talking 3 or 4 years before that happens, and maybe we've got some opportunity. What I would say is the price didn't necessarily react to this bill being introduced, and maybe I just totally put 2 and 2 together and come up with pairs. But for me, in the initial research that I've done, I'm putting that one on the need to understand that one further. That's the IMF document, and that's a coin perspective. So yeah, for me, in summary, I actually think Reserve has a great premise, a great concept in terms of what it could achieve. I think it's made some incredible steps over the last 2 years in bringing to fruition some of these R tokens that are available. The app certainly come along. There was a lot of hype for this at the beginning of the 2021 bull run. I think a lot of people got burnt with it as well, buying it at the top and it never recovering. So you don't really see too much hype about it at the moment. That doesn't necessarily mean it's a bad thing, because we can see that they are still putting out some good things, and it is still being used. The level of investors and VC firms that are involved in it are positive. Concerns for me, the unknowns about the numbers, about the market cap, and about what the relevance now is with RSV versus EUSD and how that works, and where that other missing $15 million is. Do people just unstake and stop using it? So what is the use case and what is the user base of that now? That's a worry until I can understand that. The regulatory concerns that we particularly have are something that I need to really understand a little bit better. one that I didn't probably talk about, but at the moment it's backed by USD. Well, what happens if USD goes into hyperinflation? Then unless we've got the ability to tokenize other assets, which we don't at the moment, as I said, there's a couple of instances of gold, but that's about it. Then, you know, we're going to fall foul of the thing it's trying to stop. So they even need to innovate or work with people within this space to innovate tokenizations of other assets and then get the buy-in of that to stop the threat of hyperinflation for things like the US dollar. And then finally, I can't think what my final point was. I think just my nervousness after UST. I didn't even get burnt on UST or Luna, but it had a massive implication. Yes, it was much more widely used than this is. So I'm not necessarily in two minds. I don't think this is something I am going to invest in. You know, part of me thinks, do I just throw $100, $200 at it? And then if it does do a 25x, then hey, great, I've made 10 grand or whatever it is. 5 grand even. God, I can't do my maths today. So yeah, but whatever I do, I'm certainly not significantly or seriously investing within this token. I think it's got a lot more to prove before I'd be interested in it. Love to hear your thoughts on it. Bijan, I hope you watch this back, and I'd love to hear yours. I know you've spoken about it a couple of times for me to research it, so I hope I've cleared that up for you. I'll put a few videos in. This one here is an actual video you can watch. It explains it quite well with what it does. Hi there, Mo. Hope you're good. There's also potential government issue. Most governments seem wary of algo-based stables, which this likely falls under, even if they're fine with fiat-based. Yeah, I mean, do you know what was interesting was I thought, seeing as Sam Altman is a key investor and partner within this, I'm going to run stuff through ChatGPT. Now, it actually didn't come out with 100% the same information. You know, there's probably a date issue. But it was quite interesting that some of the information they did come in. I asked ChatGPT if there was a risk of this turning into UST, but it gave me the old cryptocurrencies are unstable. There's many reasons why they could fail, so they couldn't answer the question, which was a little sad, really. I kind of hoped that ChatGPT was going to answer all my questions for me just with this link to Sam Altman, but never mind. So yeah, anyway, that's my views on Reserve. I think I do have a couple more alt token reviews, but if anyone's got any others, please feel free to drop me a message and I will add it to the list. Okay, let's bring up the other one. Where are we at? Okay, we're actually at some questions. Okay, this one's from Chris. Loving the content. Well, thank you very much. Just a few questions. 1, 2, 3, 4, 5. 5 questions. Thoughts on Aave in terms of spot holding and TA? Okay, well, I'll be honest, Aave is not on my list of things to add. It's a lending protocol. And yeah, they were hot in 2021. I'm sure they'll have their time in the sun again. But it's just something that I'm just generally avoiding because I don't really have any desire to use the lending platforms. And so in terms of opportunity, it's not something that I'm particularly in favor with. But in terms of spot holdings and TA, okay, so this is Aave. What are we on the daily here? Let's just throw it up on the weekly to start off with. So again, a bit like Aave, its returns this year, it had that great bounce, the same as all the other altcoins did. You know, after this double bottom formed after FTX and sort of the December bounce, came back up, took out the FTX highs or there or thereabouts. It's come back down. Now, a lot of other altcoins have kicked on, and this one hasn't, but it hasn't dumped either. So, you know, this kind of looks a little bit like what Polkadot does, and you could argue that at the moment it is looking to potentially build. I'm just trying to see. I'm going to have to zoom in for this one and then change my cursor, otherwise that will get caught out. Did you see it did, in theory, take out that high with a higher high there. So, you know, this has come down, it's formed its higher low. We just got to see how it interacts here. So on the weekly, there's that. I'm just trying to see if there's a particular trend line that we could maybe draw and just see if it's running up against. That's on the weekly, it's pretty ugly. Let's drop it down to the daily. See if that tidies this one up a little bit. Pull that one up to there. I mean, potentially, it's only 4 touch points. Running right into that if you were to believe that one there. I mean, is there something out of maybe that one? A lot more touch points on that one there. Yes, it bust through, but it came back down in the same day, hit it, but bounced back down, came back up, hit it, cleared it, but didn't stay above it. And then we've battled it, broke it, lost it, and now potentially we've broken through there. So, no reason why it can't continue in its uptrend. I'm going to leave that line on there, but is there also something to look at here at the moment? And it's just working its caterpillaring up that line there, then definitely potentially could be doing that. In terms of fib levels, I'm going to get rid of those now, Chris, so you'll have to come back and watch that. I mean, that one there. So what have we had? Came back down, up to the 618, fell through that one. Not a really sensible turnaround point in terms of fib levels there. So, but battled in around the 236, came back up, and now we're battling the 618, and we're just currently below it. We've still got obviously 4 hours left on the daily candle today. If we do close below that one, I'm going to assume it's going to come back down, and then it's just a case of where do you think it might come down to? I'd be looking at potentially down at maybe $72. Seems to like this 236 level as an opportunity to move into. But yeah, hope that one helps. This is the Aave platform if you've never seen it before. Worth having a sort of a look through, particularly if you are interested in purchasing it. You should really understand what it's used for, even if you're not going to use it yourself. Right. The ONG BTC chart. Okay. ONG BTC. So here we are. Spiky fade trades. Been a few spikes recently on this one, but I'm going to, again, just sort of move this one out, and I'm going to try and see, because what you can actually see is we are now at a level lower than anywhere we've been since the beginning of the 2021 bull run. It is forming a potential W or double bottom here. So maybe it's looking for a bounce, but ultimately what strength we've seen with BTC recently and dominance, and we'll talk about dominance coming back down a little bit later on. But I'm not surprised that it has continued to get slightly hammered. Now it's fallen out of the bottom of a range that we've been looking at for a very long time. That range being, I'm going to draw it roughly, but effectively, you could probably take in that wick down there back to May last year, and we're actually below that now. You could argue that that's a perfect buying opportunity because we're below that level, but for me, I'd actually want to see it climb above that and get back into this level, just to reassure myself that it isn't going to continue to fall any further. I'll be honest, I'm not in an ONG BTC trade. I actually probably don't have any intention of doing it. I'm going to sit with gas BTC. Yeah, I'd be looking at that. I mean, it's come back up to that level yesterday, and then it's just bounced back off it, which obviously is this low here. It's kind of at the neckline of where this double bottom is. So just need to have a look at that. Further rejection down, you need to be looking at in and around what, 0.00001. And then hopefully it bounces again. But obviously you've got to get into this and then wait for the spike. Now these spikes here, although they look good, I mean, that's 13%. I suppose if you were scalping them, we've had what? 1, 2, 3, 4, 5, and 6 13% recently. But some of the bigger boys, this one from top to bottom, oops, I don't know why I didn't select, was 65%. And so it's just the risk of waiting for that. But that's the problem with this. We have fallen out of the range, and so buying in now could just see it doing what it did right back here and just continue to fall. With this representation here, end of 2020, this was BTC's run from 20,000 to 40 odd thousand. It just crushed alts, and you buy in now and that happens again, you're going to be kicking yourself because you're going to lose half of it. So yeah, this is a risky time for it. People kind of look at the bottom of range and think perfect time to buy it. But the fact that it hasn't bounced to this, it could lead to further falling. So just be careful with that if you're going to go into it. Opinion on Venus. Did well in the last bull run. So I don't know much about Venus, but again, this is another lending platform. So it's again, not something that I'm particularly interested in, but let's have a look. Oh, the daily. I'm going to have to... Wow, it's had a hell of a rally recently. I mean, this is one of those classic fades, isn't it, really? Because it's gone all the way up from $4.80 to, even it closed at $9.14. It's pulled all the way back down to beyond 50% at $6.20, and it's come back. But again, it's not catapulted off for me. So I'd be a bit nervous about that one. I don't know what caused this, to be honest. But the fact that it hasn't had the momentum to come, and you know, this is daily candles. It's had 4 or 5 attempts of that, and it's starting to roll over again. It's going to be looking to come back down. I wonder if we just take onto a lower time frame. Just have a look. I mean, that big spike up happened over 2 hours, pulled back 50% on that one, then shot up again. That's what I would have liked to have seen on the daily. Is it pulled back down 50% and then cleared the high? But actually, if you remember, that just turned into the failed rally there. So shame. I'm not convinced where that one's going yet, because this feels like it's quite far away. I mean, we haven't even bothered throwing on EMAs, but let's just have a look. We'll throw 2 on. $50. 21. I mean, you just saw the 9 that it was before is where it's resting at the moment, but kind of got a feeling 50 is the bottom, 21's there. I kind of feel that shot away from both of those at such speed, it's going to come back and at least retest those. So you're kind of looking anywhere from by the time it gets there, $6.50 to maybe $5.90. But I wanted to see it build support off those and start to climb back up like it has done here. So yeah, in terms of what it does, except for it being a lending platform or money markets, I'm not, lend, borrow, and earn. I don't know anything about it other than that, I'm afraid. Do you have a plan when to take profits and move into ETH or major alts? Well, in theory, no, because the plan would be to move from alts to BTC, then at some stage make a decision on whether I'm trying to get out of the market with my BTC, hopefully the market top, or certainly a clear turnaround point, or, you know what, the financial system's screwed, I'm just sticking with BTC. So I don't necessarily have a plan to take profits of BTC and move it into other alts, and particularly just where dominance is at the moment. Although dominance has been good, I've been buying alts as it is anyway with USD or USDT. So I feel that they're in a good position should we turn around and this become an alt season. So I think I'm just happy with keeping my BTC wherever it is. In terms of taking profits, for me at the moment, it really depends, let's get rid of that, on what's going to happen with BTC. So we've had that run through, that run down there. So from all-time high down to the lows, we bust up 236 level, and the next fib level is kind of around about 35. Now, I won't immediately take any profit at 35, but if I started to see that it turned around and it's coming back down, logically it's probably going to aim for in and around 28,000, just based on these fib levels. I may look to take some profit. Now, I'll be honest, a lot of my altcoins are tied up to relatively long staking periods. So DOT's 28 days, Glimmer's 7 days. I don't know if NEAR's pretty quick. I'm not sure, actually. But with my DOTs, I just wouldn't really have the time to react to this. Although it's the weekly chart, I got to wait 28 days. So I have no idea what could happen in that time. So kind of sort of just resigned myself to the fact that a lot of them, particularly DOT and Glimmer, they're just staying there now, and they'll be what they'll be. I think my average DOT buys, $5.20 or something. So I'll live with that. And if it gets lower, I've got more money to buy some more with. But yeah, so that'd be the level that I'd be looking at. I mean, you could look at other things as well in terms of where we're going, but that 35, and it's on the weekly, but you can see it's interacted in around that. It's a lot of noise from the summer of 2021, and even when we pulled back on the run up in the beginning of 2021. So that seems to be a logical level we've cleared this now. We have got bows, we've got high block we can talk about, we've got all of those kind of different things. We know basically 32 to 34 is a pretty important level if we take it down onto the daily in terms of where some other candles and sort of liquidation levels are. So that kind of ties in with the top end of that 34 level in and around 35k as well. So that's really my next main target. I'll be honest though, we break that and there's a lot of daylight very quickly, whether you're looking at high block, whether you're looking at just other forms of TA, etc. So, you just got to be careful. I sold some BTC at 28,000. It wasn't a huge amount, it's about 15% of it. It pulled back very briefly, but it didn't pull back for long. So I kind of just moved that money into other altcoins now just because I didn't have an opportunity to buy it back. I'll get onto BTC a little bit later on, but I wouldn't be surprised to see another pullback. I think there's some evidence on some of the higher time frames that's probably where we're leading to, but because of the higher time frames, we're talking about weeks, if not months, for them to potentially play out. We'll go over those in a little bit. Do you have a plan if BTC falls below 24k? Would you be looking to move your alts back to BTC and BTC to stables? I think I kind of answered that one. So in terms of alts that aren't locked up, and I did a little snapshot of my portfolio, so I don't know if you can kind of see it, but at the moment it currently sits at about BTC around 13%, DOT about 16, Glimmer at 5, Near at 7, Link, Matic, Quant, QKB, it's not even L1 anymore, it's Multiverse X. That was a surprise when I looked at that one. All at 3%, Doge is at 7, Rose is at 1, Gas BTC is at 3, others is at 5, and Stables about 27%. So you can kind of see the breakup there. But if you assume that DOT, Glimmer, and Near, so what's that, 28% worth are locked up in staking, BTC, it's, on my Trezor. So that's already, 41%. So there is some to play with, but except with the exception of QKB, these aren't miles away from where my current price is, but they're not the full allocation. I've still got 27% worth of stables, plus I'm trying to sell this other 5%, and the Doge is just an Elon play. It was 10%, but I sold some after the logo fiasco. So, that's not a long-term one. So, I've effectively got another 39% maybe to play with. So if the prices did drop, I'd just look to buy some more of those, bring these up. Kind of want most of like Link and Matic and that to be in and around that 7% similar to Near. Near's a full bag for me. DOT's not complete yet. I don't have any ETH. Whether or not that's a smart move, we'll wait and see. So sort of looking to potentially sell those back. I'm not necessarily sure. Now, my average buying for BTC, I was going to have a look at it and I forgot to. But I buy in pounds because I use CoinPass for it. But we were talking in around £14,000, which I think is about $16,500. There's quite a few buys in and around that level back in December. And then I've been buying, but I don't think I bought anything above about £20,000. So I don't know what that is, $22,000 perhaps. So I don't know what my average buy is. Maybe it's probably, I don't know, anywhere between $20,000 and $21,000. So I'm kind of in the, I don't think it's worth me necessarily selling it now. Bearing in mind I've already sold some. I think I'd just accept that it may go lower and just hold on to it and not try and catch a falling knife. My mindset's completely changed. I'm so happy that I'm in now that I'm not really trying to sidestep anything. And we've got to fall from 30,000 to 20,000. So what's 33%? We've got to fall that much for me to potentially be under. And you go back to the likes of FTX, Luna, and Celsius, those 3 drops, I don't think any of them were at 33% in one go. So it's going to have to be something completely major to really shake that in one go. If it's slowly bleeding there, maybe I'll reassess that. But that's where I currently sit. Let me just have a look over here. Anyone else get any noise interference? Tim's put no, so hopefully no one else does. Mr. Tacker's put, I think Binance is phasing out OMG and a few other platforms as well. Okay, there we go. That should be interesting. South Korean exchanges are delisting them as well. Oh, right, okay, well, do you know, the price I don't think moved on any of those tokens particularly yesterday, but maybe they're going to start to. News on FTX relaunching. Would you really go back to FTX? If FTX launched tomorrow and went, welcome, welcome. I mean, surely they've burnt enough bridges and there's enough exchanges out there and people have moved on. You know, people have set up new exchanges. Why the hell would you go back to FTX? If you went there, I'm sorry, but I'm not calling you foolish for doing it. But if it collapses again, that is just totally on you. That's my view on it. Do you feel it's got a chance of shrugging off us? No. How much you in and out of the market at the moment? Hopefully, Richard, that showed you. But just to be clear again, there you go. Hopefully you can see it. It's probably quite small. But I didn't want to put the spreadsheet on in case I accidentally showed a field with the values and all that kind of stuff. So you've got the percentages. What I will say, I'm going to put something in Discord. If anyone is good at building spreadsheets, I would love to have a conversation with you. Happily pay. I want to get a portfolio, not like Delta. I want to be able to manually input it myself, but bells and whistles. I'd love to have a conversation with anyone that's any good at all that kind of stuff and see if I can get a job out of you for it before I go on to somewhere like Fiverr or WeWork or whatever and see if someone else can do it. But anyway, I digress. Habib, other Avengers. I'd be interested to hear, this just says question for Habib, I don't know who it's from. I'd be interested to hear your current crypto allocation and short-term plans, any alts you're currently looking to get into. Habib is not on the call at the moment, he's based in Dubai and it's Ramadan at the moment, so he's not available, but I did ask him this question in advance, hence why it's great for you to use the Google Sheets, because I can do that. He has put, I'm currently still DCAing into BTC, which is 90% of my holdings. Note, I'm up 200% on my BTC that I've been DCAing into since 2020. So he's been doing it a while. The rest is in cash on Kraken and looking to get into Polygon, Matic, for the medium term hold and flip. So that is what he's doing. Whoever asked that question, obviously I've shown you what I've done. Bijan's not on the call. So last time I spoke to Bijan, he was still out of the market, which is worth, I suppose, bringing up the Telegram poll, actually, if I can find it. I haven't checked where we are with that, but here we go. So 118 votes, 154 people seen it, so a few didn't respond. But do you know what? I find comfort that 59% of you have actually decided to not play Russian roulette with the markets, and at least expose yourself to something of it. Whether or not it's because you never took everything out, I don't necessarily know. I'm even more reassured that 16% of you, not even myself, is at that level, are between 75 and 100% in. So well played to you guys there, the 18 or so of you that have done that. I've harked on about this a few times, but what I would say for the almost 50 of you that are still completely out of the market, I genuinely believe you should at least start to reassess where your level of comfort field. Remember, trading's all about probabilities, and at the moment you are putting your money 100% on the fact that we are going to see further lows, which is fine. But exactly at what level are you going to get yourself back in? That's all I'm going to say on it, because I talk about it every week and I don't want to feel like I'm whining or nagging or anything like that. But if you are fully out of the market at the moment, please just have 5 minutes next time you go to the toilet. So just scrolling through social media, have a little think about what levels are going to interest you in getting back in. We're not saying that 15k won't happen or lower. But if that's the level you're waiting for and it never gets there, you're going to watch it go all the way back down to, say, 20s, maybe high teens, and then ride all the way back up and then be kicking yourself again. So, yeah, just make sure you're comfortable with the fact that you are out of the market. And if you're uncomfortable that you're currently out of the market at the moment, then start to have a think about what it is you can do. Say no more. Okay. This one's from Chris. Don't know if it's a different Chris or the same Chris. Harry, if when you do the gas BTC or ONG BTC trade, will it be for your business account? If so, how would it work? As I understand, it's quite challenging to open a biz account on Binance. I'd really like to do the spiky fade, but struggling to work out how I would do it for a business account exchange. There's a few things to unpack within there. So I have bought gas. I am in a gas BTC trade, which we'll go over in a moment. I'm not running it through my business. I'm running it through my personal side. All my business buys, because I look at it as, I need to answer to myself. So I put my business hat on rather than my degenerate trading retail hat on. Is I only want something that I know is an absolute 100% sure thing, which is BTC. So that's all I'm looking to do. And whilst I agree that the gas BTC or an ONG BTC is ultimately going to turn it into BTC for you, there's an element of risk there. So I don't trade, I just buy with my business account. I never even tried to open up a business account with Binance because I heard people say that it was particularly difficult. You need to, prove like websites and documents and letterheads and all that kind of stuff, which I don't have because mine's a very small business, which doesn't need any of that kind of stuff. So I use CoinPass. Let's see if I have not got it loaded up. UK based. Obviously, I'm UK based. I set up my business account in less than 5 minutes. I was validated, verified, whatever you want to call it, and had the account up and running within less than 2 hours. And it is a genuine business account, it's a business wallet, everything else there. So absolutely fine. Worked incredibly easy. I recommend you give this one a go if you're struggling with others. It's a smaller exchange. They deal in in British pounds. So you just need to do some conversions when you're working it all out. But because I'm only buying Bitcoin, all I do is I DCA into this every month. I buy my Bitcoin and move it to a Trezor, and the wallet on the Trezor is a separate wallet, which is just solely used for that. So there's no mixing of funds. There's no confusion with the tax man or anything else. Now, in terms of what you can do, and I rarely say this, but I will say it whenever it comes to tax, is I am not an accountant. I don't understand tax. I kind of knew some stuff about crypto tax, and I know stuff about crypto tax once a year when I have to submit it and I have to remember what's happened. But other than that, I don't. What I would say is, going back to your question, because CoinPass doesn't do the gas BTC, so ultimately you'd have to have a Binance account. Now, you could, in theory, as long as you documented it, as I understand it, you could move that money into another wallet, trade it however you need to trade it, and then move it back. The only problem will come is that if you just, like me, and just connect an API to your tax return each year, it's just going to pick up that movement and just assume it's part of everything else. So you need to, write a log of the days in which you did that, and then you'll have to manually go through and somehow exclude that and move it into your business tax assessment. And as I understand it, that's fine to do as long as you are very thorough in doing that. But do speak with your accountant about that. And I hope that helps. So the gas trade. So I got into gas at 0.001170. It's currently a little bit below that. Actually, it's up in the dollar value. So, but it hasn't fallen. Unlike Onk gas, it hasn't fallen out of that range, and it's got pretty close to the bottom of the range, which is why I felt it was a good time to get in. So that being the bottom of the range that we're looking at, and it's fallen within there. So I have bought some, and I'm now just awaiting. You can kind of see these are not sell orders. These are just alerts. So I'll just get a notification if it does that. So 20% rise. If it gets beyond that, I'll get a 30. If it gets beyond that, it's 40. And if it goes beyond 40%, I'm dropping everything I've got. I'm getting on my phone, or if I'm buying a computer, I'm logging on, and I'm going to be watching it to make a sell. But this is just in case it rips through all of those whilst I'm out and about. So I've already got everything kind of set up, ready to go. I don't have any actual sells on Binance yet because I want to assess it at each of those levels. But I'm kind of thinking, I'll probably sell a little bit at each of the levels and just see where it turns around after that. But that's where I am with gas BTC. Okay, let's have a look. Hi, Harry. Oh, that's another one. Martin Barnes is your man for spreadsheets. Cheers, Rob. I will have a chat with Martin. Thanks. I'm sad, but basically what I want is I've got it, a really rudimentary one. So live prices within there. Each workbook is each of the assets I bought. I log every time that I buy it, what the dollar value was, the amount was, what the BTC value is, how much I was wanting to spend on that, so I can have a drawdown the portfolio. That then gets fed onto a front portfolio page. But on that page, I want it to be able to track, profits. I want graphs. I want charts. I want it all. And I'm just not clever enough to do it. But I'm sure someone must be able to. Anyway, we live in a dream world. Okay, it's already past. I really want to try and finish this in 15 minutes. And we've not even talked about alt season yet. Told you there was a lot to get into. So, alt season. Are we upon an alt season? Or is this just everybody on crypto Twitter saying it is, hoping it is? Well, so what is it that drives an alt season? An alt season for us is when the dominance of Bitcoin against the overall market cap starts to deteriorate, and it needs an and that is being picked up by altcoins rather than stable coins. Now, past couple of weeks, we've been talking about a very key level in around 48 to 50%, 48 to 49%. And as you can actually see with this orangey yellow box, we came right up to that and we have rejected off this. Now, this is the 3-day chart. There's still 4 hours left within it. But effectively, in the last 6 days, we have had 2 red candles. And so people are suggesting that we might be in an alt season. And if we go onto CoinMarketCap, I should have had this one prepped, but I didn't. And you have a look at sort of 7 days, you see in the last 7 days, Bitcoin's done less than 0.5%, but altcoins have done well, you know, sort of 5%, 10%, 10%, 4%, 7%, 7%, 15%, etc., etc. And so money has certainly been moving out of BTC and into altcoins, but that doesn't necessarily dictate that we are in an alt season. What we could logically be having, wherever it is we've had such a move up on BTC. It's like any other chart. It needs time to breathe. And we could realistically be looking at just a pullback before it continues to move up. And so using things like the fib level, well, it hit the 382 and it bounced clean off it. So where could the next level of it be? Well, the 236 is where it could be. We've certainly had some interaction in and around there before. So we're looking at 45%, which is a further drop of about 2.5% from where we are. Now, if that money does move into altcoins, then we are going to see the price of altcoins continue to move up. But if that money moves into stable coins, not only are we going to not see the price of altcoins move up, I think we're going to see altcoins bleed very hard. So you do have to be very careful about that. And I take you all the way back to the Dixie that I was talking about at the beginning, and that potential double bottom. You know, again, this one's fallen down. We've got to expect a bounce at some stage. Even if it does continue to go below 100, it'd be logical that it'd have a bounce and a catch of its breath beforehand. And if that coincides with a retreat from cryptos back into the dollar, perhaps a fall in things like gold as well, then yeah, we could certainly see that altcoins are going to struggle. Now, we could go through some of these, but time is pretty pressing. But we can kind of see, again, it's a 3-day charts here. But we've had those nice upticks. I mean, we can throw it onto the daily, I suppose, because we're going to zoom in a bit now. But yeah, we've had that nice turnaround, but particularly in the last week or so, a real good move up on some of these tokens. BNB in front of you now, Doge, DOT. So had a nice positive return there from DOT. I'm going to keep on calling it Elrond, but Multiverse X as it is. And let that be an example, by the way. It changed its name, completely rebranded in November, and I wasn't aware of that until a week and a half ago because I just hadn't bothered checking up on it. I don't even know if it's still the same thing that I want, but I've actually gone and bought some. So yeah, if you are like me and you have a set list of things that you wanted to buy, just double check before you move into it. That was a bit of a mistake on my behalf. Link's had an incredible move, not just in BTC but in USD as well. Really been moving very strongly over the last few days to a week. Matic has always kind of done well, but it's turned around a bit there. Near's had another strong move up there. So you can kind of see it does look like we're at potentially the start of an alt season, but I'm not getting excited yet because there's a hell of a long way to go for an actual alt season to occur. We need it. What's going on here? Oh yeah, it's because I've zoomed in. We need it to not only break this 45 level, but we need to go below that. For me, down to 45 level is just an area where it could cleanly bounce. A real alt season, you go back into the low 40s and high 30s. That's when you're going to see a proper alt season taking off. So if you are one of those people like me that spend a bit of time on crypto Twitter, try and avoid the noise at the moment. Yeah, we've got potential that we're there, but there's nothing to be getting too excited about. Am I glad that I've got my bags of my alts? Yes, I am. Of course I am. I am because, again, you look at any altcoin at the moment. So we take Ethereum. Okay, the Ethereum's moved up quite well, actually. It's probably a poor example. This is the 5-day chart here. Dots. I mean, look how flat it still is. We are early in a lot of these altcoins. L1, I'm calling it. Glimmer. Well, Glimmer's not the best example because that is just not real, but it makes it look really flat. Link, again, Link's still incredibly early, still within that range. You know, break $9.50, then we get to talk. But compared to where it was, still very early. So I know there's people like Ben Cohen and that talking about moving into, you know, altcoins are going to bleed. They're going to bleed in BTC value. But in terms of moving in, if you're currently in stables into dollars, these are still great prices to be getting in. Yes, you may end up being a little bit in the red to start off with, but when alt season does start, that's going to pick up pace very quickly. So I'm more than happy with the fact that I am in this OKB. I don't know why this has rallied so hard, but we're talking about all-time highs now. So did I get in as much as I would have liked? No, I didn't. Got in around about $40. Really hoped it would go down to 37. It hasn't. I'll wait for a pullback and I'll buy the rest of my bag there. But this one's starting to move. I'm not going into BNB this time around. I think the move's been made on that. I'm back in OKB instead. We'll see where that one goes. So sorry, going back to dominance. Well, I don't think there's really too much to say there. Yeah, Chris has kind of said it. Isn't it a bit early in the cycle for an alt season? Well, so I suppose it depends. You go back to 2019. Let's go back to 2019. 2019. She's down here. No, it's not. It's here. So this 2019, we had the bottom 2019, and then we had that rally up. BTC got to 14k, and then it slowly bled back down towards the halvening, and then obviously everything kicked off from there. And you have a look at Bitcoin dominance. Ooh, what's happened there? And I'll need to do all the reassessment again, don't I? So bear with me. So we had 2019, we had the run up, we had the blow off top to 14k, but then alts moved for, you know what, 2 months afterwards. Alts continued to climb and the dominance dropped off before BTC took off again, and we went into that slow decline. And so we could be talking about this mini rally. I mean, don't get me wrong, you know, when recession really hits, whether that be soft or not, I do see Bitcoin struggling. That's my opinion at the moment. Until something tells me different, that's where I see. So, you know, I don't think this climb will last, but, you know, we went over it last week. Prior to every halvening, there does seem to be a run up and then a slow bleed back down. And in terms of how that reflects in altcoins, well, we've typically seen, it's the dominance chart, remember, Bitcoin dominance climb, and then it's fell away. Altcoins have picked up that slack for the short term before moving. And that may be where we're heading towards, but right now I'm not getting particularly too excited about it. I mean, Bitcoin dominance has had almost a 1% increase today, so it's done very well. But yeah, I get what you're saying there, Chris. Okay, right, we're at quarter 2. I'm going to try and do this in 10 minutes. Try, he says. So Bitcoin, where are we at? Lower time frames. What can we see happening? Well, this is the 4 hour at the moment. So what we had, well, I mean, this has taken quite a long time to play out. This is the chart with the vectors on. I feel like I've explained vectors enough to you. I'm going to keep it on, but if the noise is there, just ignore the green boxes and the colors of the candles. It doesn't necessarily matter. But it does kind of feel like we've had a certain amount of moves up, which could suggest that we are potentially coming towards a reversal point. Now, each different time frame is particularly different, and so, you know, we've got a rule that can't necessarily rule us out. But I'm going to start on the 4 hour. If I can, I'll tell you what, I'm zoom in a little bit. So I've talked about this before, but we kind of had a weak double bottom, what I may potentially call a W pattern there, and then we had this leg up here. Okay. Now I said last week, typically I'm looking for things to happen in threes. So we've had that first leg up, and then there's I'm going to class this as a leg up. There are other people that I speak to that don't consider this to be a leg up, and that's absolutely fine. But if for no other reason than to be slightly different, we had that pullback, that consolidation, and then potentially had this leg up here, and then a test back down of the 50 EMA. Whether or not you want to class it as it completely falling back down there or potentially bleeding down below the 50, I don't know. But I'm going to class that as a dubious second climb. Then we had a really long period where Bitcoin just couldn't really decide what happened. But what was interesting in that time was the EMAs. We were so far away from the EMAs, but then because we just stayed at the same price for what felt like 3 or 4 weeks, everything got caught up and we had a real choke point here. And then we had that final third, should I say, explosion up. Whether or not you want to class it as finishing there or actually it took in that one, it doesn't necessarily matter. But for me, that's the 3. And as I said last week, we're kind of working these things to 3. So we could potentially be seeing a reversal pattern starting to play out. What do we need for a reversal pattern? You guys call them double tops. I look at them as M formations. Well, that blast up would have been the first form within that. Obviously, we then had the pull back down to the 50 EMA, and we've started to bounce back off that. So there's no guarantee it's at the moment, because this one, as I said, was a dubious one. Maybe it isn't. But I'm now looking to just see how price is interacting on this second peak of an M formation or potential second double top. And if we are to start seeing, if we see with volume a break through the 50 EMA, potentially trying to reclaim some of these vectors, then to me, we may have completed that upward cycle, and we may then have a period of a downtrend. Now, doesn't mean that we're going to recover all of the prices all the way back down, so don't get your hopes up at all. That's not how this works out. But we may just have a period where it goes down, and we may look to recover things, and that's when we move to other timeframes to see where would be a logical area for us to have a look at. So there's no guarantee it is there, but that's certainly something that I am looking at. And you're moving on to things like the 1 hour, you sort of ask yourself, does that still play out? And I think those moves are still generally there. That does feel like, that was what? I know, it feels like 3 weeks worth of consolidation there. Even this one here was about a week if you class that move up, but it still kind of plays. Where this kind of falls apart, though, is on the daily. And what have I done? Go on to the daily. It's a bit cleaner for you guys to look at now once I've tidied everything up. So move all the drawings. And on the daily, you could argue that we're actually only in that rise 2. So, sorry, I'm all over the place. Clatter a bit at the moment. So we can either take it all the way back to the beginning of the year with sort of this W formation here. And we had that rise up. Consolidation. Now, some people might class that as a rise, but I'm not necessarily looking at that one as a rise here. Come back down. So this is all still a period of consolidation. This is the fall back down. Then we've had rise 2, and this could be, think about quite a long rise all the way up to here. And if that's the case, then yeah, we might have a pullback, and it could happen. We could be looking maybe back to retest this 50 EMA, maybe even breach temporarily below that, picking up the 800 EMA before climbing back up. But ultimately, if we are working with rules of 3, there's a third climb to take out. And then is it now we're looking at that 32 to 35 level that we previously talked about as an area in which would take us to that peak formation. So we still got potentially a further rise there. Now, that doesn't undermine the principle of what I said in the 4 hour, because as I said, on the 4 hour, there's obviously more candles than there. So we could see that peak formation, which is this consolidation period, see the fall back down and then rise up. But what you need to remember is on the daily, these are daily candles. So we're talking, that first rise took, well, let's get the date, potentially took from the end of December to, if you take it to there, that was 2.5 months. And this next one, is, if it's finished playing out, was a 1.5 months. And so we could see another 1.5 months. But I don't even think this one's played out yet, because although we've had the rise, what we really need is just a period for that to to consolidate through. So let's call it 2 months, end of April. Then another 2 months to the next one. That's May and June gone. Already halfway through the year. Then we might have to dawdle in and around a bit of time for that M formation to form. Let's say that's another 2 months. You're already halfway through the summer. So you can see that actually in the daily time frame, these things take months to play out. So, yes, we may rally up to 34k tomorrow. Of course, this is Bitcoin. Anything like that can happen. But don't be surprised if it's a long time. But that time gives us an opportunity for any of us that are in the market, or for those of you that aren't in the market but aren't in altcoins, to potentially get in don't stake them like I've done. Maybe ride those up and then have a look for yourself to see if, there's any key levels that you might be interested in turning around. But if Bitcoin's going to move, then altcoins in US dollar value are also going to move. So you could at least maybe take an opportunity to make some money there. Now, I'm not using any of this. I'm not derivatives trading. I've actually kind of lost the love for doing that at the moment. I'm quite happy with having a bit of a life and not having to wake up at 4 a.m. to see if my trade's been stopped out. So, if you are looking longs, then, you'll have to speak to other people, or short, should I say, of where you think they're going to go. Quick look at high block to see if any of that all makes sense. Let's move it on to the higher time frame. Let's put it on the monthly. We'll run the chart. 10 to 10. I honestly thought we'd be done in an hour. So again, we've had that move up. We haven't really taken it all out there. So potentially there's another opportunity for the market makers to move it up there. Now, I said that we needed that second peak to form. So is that going to form that second peak on the 4 hours, moving up to around about 31,000 before bringing it back down? Who knows? But what is an area of interest is obviously that 34 level, which could be the next target. Now, if we're just sticking with the daily, again, that could be a target for the rise up. So, use those to mark on your chart potential areas of where it could go. And on the flip side, well, we talked about the 50 EMA on the daily at 27,000, and we can see there's an area building up in and around there. So that's certainly worth it. And the 800 EMA, which we talked about, which we'll go back to the chart just to double check, make sure I'm on the daily, was at 24,000. I mean, by the time it gets, it's probably going to be at 24,500. High block, what we got? More like 25,000 there. Maybe it's going to take some time, but there's certainly a big juicy area there. And I don't think a retest back to 25k is necessarily out of the question. I mean, I've been saying that for days because that tied in with the 50 EMA, but obviously the 50 EMA is climbing every day, and so that's getting higher and higher, and it's now nearly at 27,000, and it's about to cross over the 200 as well, which for those of you that like your golden crosses could lead to a nice little pump there. But actually, have I got that right? Is that the 800 and that's the 200? I actually don't know. Apologies, let me have a look. Yeah, sorry. That's the 200 down there. That's the 800. The colors are too similar. Should get actual labels put on them. So scratch that. It's the 50 crossing over the 800. But yeah, and then there's the vector candles themselves, which we know are areas that people like to target. So there's definitely a few things to have a look at there. I'm just conscious of the time. It's 5 to 10. Has anyone got any other questions or any particular token they want me to have a look at? If not, I'll call it a day and wrap up. Still give you a bit of time in case anyone comes back and says they've got something. But if not, okay. Doesn't look like anyone said anything. Look, guys, thanks a lot for sticking with me. I think I suppressed most of those coughs, so that is always a good sign. In terms of what we covered, obviously we've gone over a lot there. I'll post all the stuff about Gary Gunzer. He got an utter grilling today, and it was pretty enjoyable to watch some of the sound bites. I definitely think it's worth having a look at those. RSR, as I said, I'll do a 10-minute video for that. I'll make that a little bit shorter than what I went through. I'm actually filming a podcast on Thursday, so the chances are that video won't come out till the weekend, but I will try get it out earlier. But yeah, pretty excited about filming the podcast on Thursday, so I won't be at the trading pub. But when's the pub? It's a crypto related podcast, so once it's filmed and it's out, I'll let everybody know about it. I'm sure I'll post it in RT Discord for you all to have a look at and just laugh at me bumbling around unprepared questions. But yeah, the trading pub's at usual time on Thursday at 2 p.m. Hope everyone has a great evening, and if you've got any questions, you want me to look at anything for next week, either use the Google Sheet or drop me a message in Discord. And other than that, it just leaves me to say have a great evening, everyone, and thank you very much.